Welcome everyone to QB Power Hour. Today is November 17th, 2016, and today's topic is budgets, forecasts, cash flow projections, and business planning in QuickBooks Desktop. Yes, I know the title is a mouthful, and we are going to cover a lot of things today. Today's episode is eligible for ACE, ACE. So if you're an advanced QuickBooks Pro advisor, you will get ACE credit for your annual reporting. The agenda for today is we'll talk about QB Power Hour and the host real quick. We'll discuss the CPE process. Note there's a new CPE process. We're going to change it this time around. It's going to be different. There's going to be a new CPE ACE process, which we'll discuss briefly. And the topics and learning objectives for today are to identify all the tools within QuickBooks Desktop to create any future looking financial statements like a cash flow projection or business planning. And we're going to use current accounting data for that. Now, you will learn how to create a budget and forecast from scratch and use, of course, some of the existing accounting data and how to build reports to compare actual versus current performance. Okay, next slide here. About QB Power Hour. We are a webinar series, usually twice a month, Thursdays at 12 p.m. Eastern. Next episode will be in 2 weeks, December 1st, which will also be eligible for ACE. And it's going to be about batching and automation in QuickBooks Desktop. Normally, we cover about 50% QuickBooks Desktop, 50% QuickBooks Online. However, this episode is 100% QuickBooks Desktop. So if you only work with QuickBooks Online, unfortunately, there will be not much here that will be useful or transferable to QuickBooks Online because everything here is different than in QuickBooks Online. And from one time to time, we'll have a third-party guest or third-party app discussing the product, not for today's episode, but that will happen. Michelle Long is the co-host of QB Power Hour and not here with us today because she is at a QBO seminar, I believe, in New York or Baltimore. I forget which city it is, Boston, one of those. She's an international speaker. Check out her LinkedIn group, has over 160,000 members. Myself, my name is Hector Garcia. I'm a CPA, an accountant from Miami, Florida. And my email is hector@garciacpa.com. I always try to answer your questions as much as possible. And my Twitter handle is @QBKAccounting if you need to get in touch with me or comment about the webinar and so forth. Okay, so some upcoming events real quick I want to make sure that you're aware of. QuickBooksTrainingEvents.com. If you're not certified in QuickBooks Online yet, go ahead and go to the website. They're doing a tour. Michelle is in one of the trainings, and they're doing trainings all the way through January 12th. This is for basic QuickBooks Online certification. If you want to get certified with a virtual conference, you can join the virtual bootcamp, which is going to be mid-December, QuickBooksVCon.com. Scaling New Heights will be in Orlando, biggest conference for QuickBooks nerds, let's call it that, will be in June. I'll be teaching a couple of classes there, and I assume Michelle will too. And QuickBooks Connect next year will be in San Jose, November 13 to 15, QuickBooksConnect.com for that. Okay, so pay attention. The CPE and the ACE process has changed. If you need your CPE certificate or an ACE certificate because you're a QuickBooks Advanced Pro Advisor, you must attend the entire webinar live. So if you're watching the recording, it's not going to work. You must be logged in for at least 50 minutes, and we're not going to do any more keywords and CPE keywords. What we're going to do is we're going to launch 4 polling questions throughout the webinar, and you have to answer at least 3. I mean, might as well just answer all 4, but I'm saying just in case you miss one, no big deal, but we're going to launch 4 polling questions throughout the entire webinar. You're going to get an email with the certificate. It will be in an email format, and into it will also be notified for ACE, but your CP and your ACE still self-reporting, so you're responsible for doing that yourself. Okay, so let's jump right into the topic, which we'll talk about budgets. So budgets in QuickBooks Desktop. All right, so budgets. So budgets have a couple of options. You're going to have a budget versus actual comparison report, which is the most commonly used report. You can actually break down a budget by class, by customer, or an overall budget for the company. So it does give you the option to do it based on a class or a customer. Now, budgets give you an additional function called the performance report that allows you to also compare your year-to-date performance. Now, one little interesting tidbit is you can actually export your budgets into IIF, modify them in Excel, and import them back in. And if I have time, we'll cover that. Okay, so we are in QuickBooks Desktop now, and let's go just through the basic motions on how we set up a budget. So the first thing we do is we'll go to the company menu, planning and budgeting, and click on set up budgets. All right, we'll click on set up budgets. And then by default, if I already have created a budget, QuickBooks will pop up with the last budget that was created. I can actually click on the right here where it says create new budget, and I can click on that. And then I can choose the year in which I want to create that budget for. So for example, in this sample file, this is all, I believe it's a 2018 year. So we're going to use 2018 for the budget. That way we can compare some of the reports there. And then it is asking you whether you want to do a budget of the profit and loss or a budget of the balance sheet. They're two separate individual budgets. You would have to create them individually. So let me go ahead and click next. Then it's asking you, do you want to do an overall budget, right? No additional criteria. This would be for the entire company. Or do you want to break it down by class or by job? So that's possible too. I'm going to do it with no additional criteria. Then I'll hit next. Okay. Now, you can now choose, or one of the options you have, you can choose to just type all the data by hand. So you're going to type every single income and expense projection by hand, or you can grab the actual year's data as a starting point. So QuickBooks can say, okay, let me grab whatever you did the previous year and let me put it as a budget for the next year. So let me go ahead and hit finish. Okay, and then QuickBooks will automatically create a budget based on last year's data. Now, let me show you some of the components here because some of these are pretty interesting. For example, if you look at January of 2018, there's a number there, okay? And all these numbers, again, we told it to create the information based on historical information. But if I can change this, so if I want to make this 25,000, I can just literally just type it in there. But there's a interesting button in the bottom called copy across. So if I click on copy across, it will take the $25,000 and it will move them to every single month. So then you can basically create a raw number that gets copied across. So you only really have to do that once. Now, by nature, QuickBooks budgets are based on months. They're monthly budgets. So that's a really important piece to just kind of get that settled. Now, once I copy the 25,000 across, I can click on the bottom left here where it says adjust row amounts. So if I click on adjust row amounts, I can actually say, all right, so starting the first month, I want you to increase that amount by, let's say, 2%. Okay, so I'm basically telling it to go up 2%. Okay, and I hit OK, and basically it's going to increase all the dollar amounts by 2%. So that's kind of one of the interesting things about that. Now, if I select this second option called currently selected month, which happens to also be January, we can also enable compounding. So enable compounding would be that it not only increases it by 2% across the board, but it also increases it by 2% upon itself. So it will be 2% times 2% times 2%. So you'll get this sort of exponential increase. So I can hit OK. And then you can see that exponential increase of, let's put here 2%. And make sure you put a percent sign, not a dollar sign, because it will just go up by $2. Okay. So then you see a 2% exponential increase of your sales. So let's assume that's going to be my sales projection. Now going down a little bit, I can go expense account by expense account and also choose whatever I want in there if I want to manually change it, or I can leave it there just for the sake of moving forward. Now, if I hit clear, my entire budget will be deleted and basically I would have to start from scratch. So let me go ahead and hit OK. and now my budget is created. So now what do we do with that budget? Well, we can do a couple of things. One, we can go to reports, we can go into budgets and forecast, and then basically we're going to have three choices here for budgets. We're going to have budget overview, budget versus actual, and budget performance. So let's go through each one. So budget overview would just be a report that shows me my budget. There's no comparison with sales. There's no performance data. This is literally a profit and loss based on a budget, not based on actual data. And then the normal options here apply. We can do this by quarter if we wanted to, or by day. In this case, QuickBooks will literally split the month by 30, or by week, and it will literally split the month by 4 or 5 weeks, however weeks are in the month. So it's really, really interesting how you create the budget in a monthly basis, but QuickBooks can splice it and dice it in several formats when it comes to timing, right? So that is the budget overview. Let me go ahead and close that, and let's go to the report that people actually really use, which is the budget versus actuals, and we'll go through some of the details there. So budget versus actual, again, it will ask me which year's budget you want to do, and that's based on the budgets you have created. And then I'll click on next. And then if I have multiple budgets, like by class or by job, it will ask me there if I want to pull any of those specifically. But in this case, I'm just going to do the standard by month and then click finish. And budget versus actual, in its nature, is going to show 4 columns. The actual numbers, which is the one that contains the month. So this one that says January 18th, that's the actual number. And then budget would be the budgeted amount. Dollar over budget, that would be how much more or less I am in terms of getting close to budget. And then the percentage, right? Whether I am 84% close to hitting budget, or maybe over budget in some cases, whenever you see 100% over budget in some cases. Now, a lot of people ask me, how do you get that red in there? But because for budgets, I think it's important to do colors, because you really want those numbers to stand out. So the way you get red in there, just to show you, we go to customize report, we go to funds and numbers, and we actually hit this little checkbox here that says in bright red. So we can actually just leave it in black if I want to, but then if you're under budget, it doesn't show. So I find it extremely valuable to do at least the bright red there. Now, the other thing is, when it comes to budgets, I normally just get rid of the cents. I find that a lot of times the cents just tend to be a bit confusing. So I'm going to hit OK there. And then for most people, it actually, it's just a lot more palpable to work that way. Now, it doesn't mean that you have to turn off the cents or anything like that. But I mean, that's just an option. Okay. Now, as I go through my budget here, notice that I got 4 columns. I got actual, I got the budget, I got a dollar amount, percentage amount. I'm going to click on customize report. I can actually turn these off. So if I don't want to see the dollar percentage, or the dollar difference, or the budget percent, I can take that away and literally just compare them two without the difference. Now, most people need that variance, absolutely need that variance. So I'm not advocating to turn that off. I'm just, showing you. Now, the other kind of thing that most people don't get to here on this advanced window, it shows you a couple of interesting things. This one says show only rows and columns with budgets. Okay, so I'm going to go ahead and hit OK, and then hit OK. And then I'm going to show you what I mean by that. So, for example, if I happen not to have a budget in the advertising line, okay, the advertising line will pretty much go away. So what I mean by that is, if you go back into your budget here, so I'm going to edit my budget. I'm going to go down to advertising. So if I have my advertising line completely blank, so there's no budget in it, and I may have to refresh that report. Okay, that budget line, I will have to refresh the report, but that's how you can hide some of the lines that don't have a budget. So that's, once you run the report, I would have to rerun it, but once you run the report, that will go away if there are no budgets on that particular line or that particular month. Now, the other important thing is display rows. Now here it says active. If I click on all, it will also display the accounts that don't have any information whatsoever. So if I happen to have not have a budget or not even have any financial data, that also includes that in there. And I tell you, a lot of times what ends up happening is you print a budget report and there's an account in the chart of accounts that people are used to seeing there, but it happens to have no numbers. It's important to show that too, because it's important for people to know that has not have any budgets or it hasn't been used. And of course, if you don't want that to show up in there, don't hit that checkbox or delete the account or something like that. All right. So that's budget versus actual. That's really all you need to know about that. Let me pull one more report on the budget side, which is going to be profit and loss budget performance. Now, the profit and loss budget performance is pretty much the same thing. However, it's going to add one more additional column. And this is much more useful whenever you're comparing a month or a quarter only. So for example, right now I'm going to compare just the current month. Now the performance version of the profit and loss gives you two additional columns. One is my January to December year-to-date performance versus my year-to-date budget versus my annual budget. So year-to-date budget and annual budget are different, actually. Let me show you what I mean by that. So if I actually put 0701 2018 versus 731 2018. So I'm just going to look at July. So if you look at that year-to-date budget, that would be the accumulation of the budgeted amount from January through July. However, annual budget would be the entire budget from January all the way to December. So that's a really important piece to know because that allows you to compare some of these. Now, under customized report, you can also enable dollar difference and budget difference if I wanted to. Now, another common question I have is, Hector, I just want to see my budget for my expenses. I don't want to see the sales account. So that's pretty easy. So we're going to go to customize report, and then we're going to go into filters. And then here where it says account, all income and expense accounts, we're going to change that to all ordinary expense accounts. Okay, or we can do expense and other expense accounts. We can do both. And then I hit OK. And then I am not going to be looking at any sales budgets. I'm going to be looking at just expense budgets. And because these reports get so big, right, budget reports are usually big. And we had a big group of the crowd here that's logged in that answered the question that they've been using budgets quite a bit that know this. So what ends up happening is sometimes, this is just a tip, sometimes when you look at budgets, sometimes it's not just good to look at your income and expense budgets combined. Sometimes just looking at the expenses by itself could be useful. Okay. All right. So let me go ahead and close that. Let's go to now forecasts. So forecasts are almost identical to budgets. However, you can't break it down by class or customer job the way you can do it with a budget. And you do not get the year-to-date performance. And also, you cannot export and import via IIF. So a forecast it's a really light version of budget. So you can use it as quote unquote an additional budget, but it is not as powerful. So I would suggest that you focus on working with the budget and then only work with the forecast when you need to. So let's go into the forecast here. So let's go into forecast real quick. And forecast works very similarly. Like I get to pick my year, and I am working with QuickBooks Enterprise, by the way, in this one. So Enterprise will allow you to do class and customer job, but QuickBooks Pro wouldn't for forecast. So I'm gonna go to next, and then I can do the same thing. I can create a forecast based on previous year's data, and everything on this screen is pretty much identical. I can change these numbers. You know, maybe I want to be a little bit more far-fetched here on my sales, and again, it's I would say for the most part, just don't think of this as an entirely different function. This is just like budgets. So when I run the report, I'm going to go to budgets and forecasts, and then notice I only get the overview and the actual, I don't get the performance or the graph. So let me go to budget versus actual and hit finish and finish. And all the functionality is the same. All the functionality is consistent. I can choose what to show to compare against. I can do these by quarter if I want to. So again, just think of it as a secondary. Think of it as a secondary budget. Okay. Just what you don't get is that performance report, which is the one that gives you that year to date and that annual budget. Now, if I go to the graph, the budget versus actual graph, which I normally don't work with it too much, but some people find it really useful. You could do it this way. So you could run the graph that will compare budget versus actual, and show you where you're under and where you're under, whether you're favorable or unfavorable in terms of your profit and loss. So this could be useful, but I personally don't use it very often, but it is there. Okay, so that's budgets and forecasts. Now, one really common question I have is, Hector, how can I work my budget in Excel instead of working it in QuickBooks? Now, I have a detailed video where I actually do that. It took me about 20 minutes to explain the entire process. I'm going to go ahead and put a link to that video that goes to that process. Just in case you want to go pretty in depth in that portion. But I am going to show you one thing real quick. Once I have my budget, let me go back to it real quick. So once I have this budget, I can actually export this into a file that I can manipulate in Excel and bring back. So let me show you that real quick. So I'm going to go to File, Utilities, Export, List to IIF. And I click on that. Then I select budgets. And then I click OK. And then I'm going to put a name. Let's call it Budget 2018. Okay, so I just gave it a name, put it on my desktop, hit Save. And then once you export the IIF, I'm going to scroll these down. Once I export this to IIF, I can actually grab that file and open it in Excel. Now, by the way, the idea behind exporting the IIF is so you can import it back in another QuickBooks file. What I'm about to do is not what it is designed to do, right? So don't feel an enormous amount of pressure that you have to even do this. That's what the IIF file is for, is to import in another QuickBooks file. But if I grab that icon, which is that IIF file that I just exported, and I drag it into Excel, what Excel is going to do is it's going to open it for me, and there's going to be a couple of kind of quirky things that you have to look after. For example, there's going to be a couple of header lines. You can't touch these. If you touch them, you can mess something up. And there's going to be a header column also. But other than that, you're going to get your entire chart of accounts here, and then you're going to have your entire budget here. So if I wanted to use these numbers and manipulate them, for example, let's say I want to change my January construction income budget to 100,000, I would just put the number there. Okay. Now notice that on the import, credit balances are negatives and debit balances are positives. That means that income has to be a negative value and expenses have to be a positive value. Don't ask me why, that's just how it is. So if I save that, okay, and then I'm going to go ahead and close it, then go back into QuickBooks, and I'm going to close this and go to File, Utilities, Import, IIF file. Okay, and then I go find my file that's in my desktop. This is the one that I just edited in Excel and hit open. It will import my budget back in. Let me go ahead and run the report so you can see how that month is going to be 100,000. It might have done it in a different year. Maybe I have to close out of QuickBooks and open it back together, but trust me, it works there. I'm going to go ahead and put the link to that step-by-step guide where I actually do the whole process. Okay, so that's budgets and forecasts. Apologize that wasn't showing right away there, but don't have time. We'll move on. Guarantee you it works. Let's go to cash flow forecast. And before we do that, let me run another polling question. Now, for cash flow forecast, we're going to do two. We're going to talk about one called cash flow forecast, and we're going to talk about cash flow projector. They're two completely entire different functions. So we're going to work these two, cash flow forecast and cash flow projector. So let's start with cash flow forecast. So the point of the cash flow forecast is to grab the current register balance, account for forecasted inflows, which are based on open invoices that are assumed that they're going to be paid on the due date. Then it's going to forecast the outflows, which is going to be based on bills. You have to have bills in there to be paid on the due date. If there are no bills or no invoices, you cannot use the cash flow forecasting tool to project anything. Okay. The other tool that we'll talk about, which is cash flow projector, that you can manually add things in. So we'll discuss that after. But specifically on the cash flow forecast, it's 100% based on the data that is already in QuickBooks. Okay. All right. So let's jump into the product now. And let's go into reports, company and financial, cash flow forecast. It's all the way in the bottom of the company and financial section. There's a shortcut to get to that report, which is Alt RFH. So if I hit Alt RFH, it will get me to that report. Now you don't have to use the shortcut, but whatever. Okay, so really important. Purchase orders will not be projected in here. Estimates and sales orders will also not be projected here. This is only based on outstanding invoices and outstanding bills. So let's start with projecting it starting today. And this is the today's date on the sample file. And let's go all the way through a month. So what we're going to do is we're going to use the balance from today. Let's start with tomorrow. Let's do tomorrow all the way to January 15th. So I'm going to forecast a month worth of cash flow. Now that's a very common thing. So what are all the components here? So let's break them all down. These are extremely important. So the projected balance on the right side, the 394,023, it's how much cash should be in the bank right now, assuming that if there's any invoices due today, they're going to be paid today. So notice that there is now a breakdown of every week for the next month. Now that month is based on the date range that we used here in the top part, but these breakdowns are based on the periods. So if I want to project cash flow in a, let's say for example, in a 2-week breakdown, it's going to break it down every 2 weeks. If I want to do it in a month breakdown, it will break them down for every calendar month. If I want to do it every half month, it will do it for every 15 days. So I basically get to pick, whether I want daily or a weekly cash flow projection. The most common is week. That's why week is the default. Now, what are these numbers? We're going to have on the accounts receivable column, these are all the invoices that are due on the dates that fall in that specific week. So for example, you look at the week of December 16th to December 22nd, you got 36,000 in there. If I double click on the 36,000, it will show me a report of all the invoices that are due in that period. Let me go ahead and double click on the invoice so we can see it, right? There's the invoice date and there's my due date, the 22nd. If I change that due date, for example, if I change it, let's say to the 28th, you're going to see, and before I hit save and close, just make sure that we know where this lands. So this is currently landing on that first week. But if I change the invoice and I change the due date, now you're going to see that 36,000 shift from week 1 to week 2. So let me go ahead and hit save and close. And yes, and there it is. You saw that shift from week 1 to week 2. So that's 100% based on the due date of the invoice. Now, the common question I have is, look, my customers don't really pay on the day of the invoice, they usually end up paying kind of late. They pay 2 days late, 3 days late, 4 days late. So if that's the case, we can click up here where it says delay receipts. And we can assume in here, this is where we make the assumption that people pay about, let's say, about 10 days late. So I'm going to put there 10 and then hit refresh. And then you're going to see how all these cash flows push up to 10 days after their due date. So that's really, really important little option that you have there. Now, there are ways for you to check the historical performance of your receivables, so then you can infer or calculate based on that what that delay receipts should be. So to do that, we're going to go to reports, we're going to go to customers and receivables, and then we're going to click on average days to pay summary. So when I go in my average days to pay summary, I'm going to get here a breakdown of all my customers and what their average days that they take to pay. Now, this is only based on paid invoices. This is not based on open invoices. This is simply a payment to invoice performance report. So if you look at how many days they take to pay, from that number, you can deduct it from your average terms and then figure out whether or not you should add a delayed receipts up here, or maybe don't add any delayed receipts, because most of these people pay within 10 days and we have 30-day terms, so everybody here really pays on time. Now, another quick little tidbit here, a lot of people don't know this, but if you double click on this total dollar amount here, or which would be the same thing as going into reports, customers and receivables, and average days to pay, not the summary, we get a column here called date paid. This is the only report in the entire world of QuickBooks in which that column does anything. And what date paid does is it actually shows me the invoice original date, which in this case is 5/15/17. And then if the invoice was paid, it actually tells me the pay date. This is the only report in all of QuickBooks that does this. Okay, so kind of an interesting thing to know, that you can actually see invoices with a pay date next to it. So let me go ahead and click close and click close. So that's just a little tidbit on how we can do that. Now, one of the common questions I have is, hey, what about my payroll? What about my rent? What about my office supplies? What about all these things that I don't create bills for? This tool is not going to correctly project my cash flow. Well, the answer is yes, you're right. If there's no bill in QuickBooks, it won't do it. If there's no invoice, it won't do it. So if you wanted to create a fake bill for whatever reason, if you wanted to create a fake bill, so I'm going to go into vendors, enter bills. I'm going to create a vendor called monthly cash flow projection. And I'm going to create a fake bill for my average overhead. Let's just say 25,000. And I'll put it here into office supplies. It doesn't really matter. And then I put here note used for cash flow projections only. That way we don't accidentally print a check to this vendor that doesn't exist. So if I create a bill, and let's put here the end of the month and make this due the end of the month. So I can, if I create basically a stand-in bill, a fake bill, and I click on save, and I come in here, then now I can project my overhead. So if you wanted to project payroll, office expenses, whatever, you would have to create a bill for this. And then once the month is over, or once most of those expenses are paid, simply all you have to do is change the date, move it to the next month. That way, if I'm doing a cash flow projection that's maybe more than month, then it will show up on when it's supposed to show up. So that's just a quick little tip on how you can insert some of that information in there. Okay, so that's what the cash flow the cash flow forecast is, not the projection. That's what the cash flow forecast is. Now, let me answer some questions here. So one of the questions I have is, what about future dated checks? Will those be included? The answer is yes. Anything that affects your bank, like a deposit in the future or a check in the future, those are going to be displayed here under that third column that says bank accounts. So right there where you see bank accounts, that third column, that's going to show you any future check. So if you do, in fact, create a future check, that's going to show up in here. As a matter of fact, if I double click on this 4,200 that you see there, I see all the checks dated for the future there. So okay, so that is cash flow forecast, which is 100% based on real QuickBooks information, not based on any other data that I'm thinking about or memorized transactions or historical, nothing. This is only based on invoices and bills that are actually created in QuickBooks. I'm going to show you another tool, often forgotten tool, called the cash flow projection tool. Now, the cash flow projector tool, only included in QuickBooks Premier, is similar to the cash flow forecast. However, with this tool, we can actually manually insert information in there. So I'm going to go ahead and click on cash flow projector. And again, whether you use fake bills or not, like I did on that example, cash flow projector will help you. That way you don't actually have to create any standing bills. So let me kind of walk you through the cash flow projector. So this doesn't seem like a natural QuickBooks tool because it actually goes through a questionnaire. So let's go through it. So I'm going to go ahead and click on next. And the first question it tells me is, which bank account would you like to project funds for? So I can select all the bank accounts, my checking, my saving that I want. Would you like to make an adjustment into your initial balance? Let's say, for example, I have an outstanding check for 100,000 that I haven't put into QuickBooks yet. So can I make an adjusted balance? Yeah, I can do that. So I can adjust it by 100,000 if I want to. Again, if that was already in QuickBooks, I don't have to do it. But if I want to make a quick adjustment, I can do that. So that's going to give me my new beginning balance, and that's extremely important because that is your baseline. Then I'm going to click on next, and then it gives me a couple of choices. It says, how would you like to project your income? This is your income. So we can do a couple of things. One is I can click on I'll project it manually, and then I can just sit there and say, well, on whatever day, let's say December 25th, 2018, I'm going to get most of my invoices, whatever, you can type it whatever you want, and say I'm going to get 50,000, right? And then I can manually put dollar amounts in here, and I can manually project my income on the date, and you're going to start seeing how your cash receipt summary starts getting constructed. I can also choose my average, so I can say use my last 6 weeks of collection, and I hit yes here, and then QuickBooks will literally grab whatever I collected the last 6 weeks and push them over and project them over the next 6 weeks. Or I can say use the average of the last 6 weeks, and then that's going to average out the entire collections on the past 6 weeks in a weekly basis. Or I can have different things. So I can do project the same as last year. So that will take last year's information and push it in here. I can do weighted average. There's a couple of really interesting options there. And then even with that, I can manually make adjustments and say, well, I'm actually going to get 5,000 more here, and then I'm going to get, let's say, 2,000 less here. So there's a couple of really interesting tools here to project my income. Now, when I click on next, now it's time to project my expenses. So I can actually manually, for this particular one, I can manually project my payroll, my taxes, now these I typed in myself. So I basically select any line item from my chart of accounts, and I can select the date. Okay, I can select the date here that I want. I can select whether or not this is going to be a weekly thing. So I can put here weekly, and then I can put $50. So tons of flexibility there. And then you're going to see on the bottom where they start getting summarized. So I'm going to hit next. Then the last question says, I'm actually going to grab what's on my accounts payable and put it all in this cash flow projection based on the due date, right? So based on the due date is also going to assume It's going to assume both what we manually entered here. These are for the things that we don't have bills for, and then the things that we assume we're going to pay because they happen to be in my accounts payable, right? And then I can click on finish projection. And then basically what you get is you get a weekly report of all the balances that your bank should have after your income projection and your adjustments, and then all the cash outflows. And this allows you to pretty much know whether or not you're going to have enough cash to make payroll, to pay rent, for whatever. And then at that point, you can save it as a PDF or print it and hit close, and you're pretty much out of it. So I'm going to click close. So that's the cash flow projection tool. A lot of people don't use it. It's actually really, really nice. It's really not until you get shown detail by detail that you realize that that is there. Okay. All right. So let's go to the last tool I'm going to show you here, which is going to be the business planning tool. Okay. So the business planning tool is a standalone version. It's a standalone tool. It's a light version of a software called Ultimate Business Planner, which is about $100, and it's included with QuickBooks Premier, Accountant, and Enterprise, not with Pro. And it takes data from QuickBooks. It can project income and expenses, and on top of that, it gives you a tool to build a business plan. Okay, so that's actually kind of interesting. So I'm going to go into Company, then I'm going to go into Planning and Budgeting, and then I'm going to click on Use Business Plan Tool. Okay. So when it first loads up, you got a couple of tabs here. You got the Welcome tab that kind of just explains to you what it is. Then on the Company tab, and then you can click on Next, and you can actually walk through, some financial projections. So for example, on the Income tab, we can click here where it says Income Projection Wizard. Okay, so there's a little button there that says Income Projection Wizard. And then once I click on that, I click on Next, and it tells me, when would you like to start planning? So we're going to say, well, January of next year. And then I hit Next. Then it says, do you want to manually enter the numbers? Do you want to compute an average from the last 12 months? Or would you like to use 12 months worth of history? Of course, you can choose whatever you want there, and then hit Next. And then you can say, yeah, I'm expecting about a 3% growth or whatever, or 15% growth. Right? So you can pick whatever you want there, and then hit Next. And then it tells you which accounts would you like to project that income to. So if you happen to have multiple income accounts, that would be there. And then I hit Next, and then Finish. And then you're going to see the average of last year be included into your income projection with that annual growth. Okay. So then we're going to hit Next. And you see a lot of these tools have a lot of things in common. Then we get all my expense categories. And then I can click on my expenses projection wizard. And same thing, it goes to the same motions. It says, when would you like to start projecting expenses? I'll select next year. And then would you like to use the average monthly, the history, or do it manually? I'm just going to do the average monthly. Hit Next. Do the same growth. Choose which accounts I want to project. So if I don't want to project contributions or taxes or whatever, I can exclude them from the projection. Then I can hit Next and Finish. And now you see basically my projected financial statements. And this goes all the way to 5 years. So that's actually a pretty neat thing. So we can do 5 years worth of projections with this tool. Then I'm going to click on Next. Then it tells you, all right, we're about to go through an interview process in which we're going to ask you more details about certain assumptions about the business. So it basically is asking you, are these balances on the balance sheet okay? Can we use these as starting balances, or do you want to modify them? So at that point, you can modify them if you want to project any different balances than the ones that are here. Again, these are all based on QuickBooks data. Then it says, is there a minimum bank balance that you need to have every month in order for you to maintain your cash flow? So again, you can put $25,000, and that becomes useful for that. Then you can say, yes, I have inventory. No, I don't. You can calculate some depreciation. So this is where you can manually put in some depreciation. QuickBooks doesn't have a built-in depreciation tool that it can assume what depreciation is. So you can just put whatever you want there. So we hit next, and then it will ask you a couple of questions, and you go through the motions, you go through all the questions, and then once you finish, it will actually build a financial projection for you that then you can insert in your business plan. So I just went through the whole process here. Now, when I go to reports, I can do a couple of things. So I can do my profit and loss report. And what you're going to see here is 5 years worth of financial statements projected, again, based on a combination of things: history, assumptions, all those things. So I can have projected financial statements in here, which I can summarize also per year. So in this case, when I click on summary, it broke it down per year instead of by month. You can obviously export it into Excel and then manipulate it even further, or you can print it into PDF or print it in your printer. So let me go ahead and close that. And then we got a couple of interesting things here. We can have some graphs. So we can do, for example, a break-even analysis. And based on we didn't put any cost of goods sold information there, so that's why we don't get that intersecting line. But if I had done that, then you would get that break-even analysis there. So it's a couple of interesting little tools there. I recommend that you kind of go through them. The cash summary is also really important. That lets you know if you're gonna run down in cash anytime soon based on your projection. So I was pretty aggressive with my sales projection, so it looks like I'm always going to have cash. Okay, so those are like just sort of the quick reports and quick graphs you get. Now, onto the business plan portion, which is really the powerful piece of this. I'm going to go ahead and click next. You're going to see here on the left side have a couple of categories, and you're going to get basically a default set of categories in which every business plan should have. We're going to have an executive summary. We're going to have, so these are just places for you to type, right? So none of the work is going to be done for you. All the stuff here are boxes for you to type, but it does guide you to the process, okay? But in any of these, you can insert a graph. So for example, if I'm doing something in my financial assumptions, I can actually insert a graph or a table here, and I can do it based on those previous projections that we made. So remember when we actually created those projections, we can actually insert them here, and this just lets you know that when you are looking at the business plan printed, that chart will print in there. So that's the purpose of projecting the income, is so you can insert those financial statements, so you can project them as part of your business plan. Now, if you go to the help menu and click on learn about an upgrade, now I'm not telling you to upgrade or anything like that. I'm just telling you to click that. So it takes you straight into the website, and then you click on sample plans. You can actually download any of the sample plans here, and that becomes like a really nice cheat sheet to have along with it, because you'll print out an entire business plan that is based on the business planning tool, and then you kind of get a breakdown of the verbiage that is being used on each of these categories. So as you're building, you have this next to you. As you're building the business plan, you kind of have an example next to it of what normally people put there. You can see the explanation up here at the top that tells you, what you should have there, and also an example verbiage in there as well. So on top of having a sample plan and that next to it, that's all there to be used. So when you're finished, you basically print out an entire business plan, and you can take QuickBooks data to project with it. And then we'll go to the wrap up here. So thank you very much for joining today's QB Power Hour webinar. You are going to get an email within 3 weeks if you answer all the polling questions with your ACE or CPE certificate if you need to self-report if you happen to be an accountant. In the next 2 weeks, we're going to have QB Power Hour in 2 Thursdays, December 1st. This will be about automation and batching in QuickBooks Desktop. Will also be ACE eligible. So we're going to talk about memorized transactions. We'll talk about batching invoices, all those topics. Anyway, continue the conversation by joining our Facebook group. Just search for QB Power Hour in our Facebook group. I prefer you ask the questions there. I'm pretty active in it. I answer a lot of the questions. And also take a look at Michelle Long's LinkedIn group called Successful QuickBooks Consultants, which has about 160,000 members. Anyway, thanks for joining us. I'll see you guys in a couple of weeks.